Today in the crypto space, we see the market taking a bit of a hit. Bitcoin down to about $79,600, down approximately 3%. Ethereum holding steady. We have XRP holding steady, and the rest of the altcoins pretty dipping down. Solana, Cardano, Sui, many others coming down to lower levels. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project, a project that a lot of people have been asking me about lately, and that project is called AERODROME. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here, guys. The volatility is in. We can see a lot of volatility today. Crazy price action, up and down, whipsaw, everybody getting wrecked, up and down, long shorts. At the end of the day, guys, at the current moment, we are seeing a bit of negativity. We do see the market cap fall a little bit to about $2.6 trillion. We're at about 4.9% to the downside. Not a good look. The only thing that I can say is at least trading volumes is pretty, at the current moment, it's kind of cooled off, which is not bad, guys. We got to cool off, especially after this dip and all that, you know, the news events that are coming out with tariffs are still being yapped about and so much happening right now. These conditions are very, very difficult. And when the conditions are volatile and difficult together, you need to have risk management on point. What's so important right now is that when you are in a trade, that you have an understanding that a trade is an opportunity to make gains and obviously to lose them. And what you have to do is, as soon as you see a trade in some green and some profit, respect the fact that you finally have a trade that is free, that is risk free. The only way you're going to really achieve that is to ensure that you have your stop losses into profit, at least covering your break-even point and some of the fees, a minimum, right? Because if you get stopped out, who cares? At the end of the day, you get back in. And a lot of people at this current moment are getting into trading and truly not understanding what it means in a volatile market. Guys, we are in a volatile market. Although there's not that much trading volume, what's making it very volatile is the news. And this is something that we haven't really experienced that much, especially the frequency. It's all in the news. It's all about Trump and his speeches and his statements and what's going on with the geopolitical aspect of the economies and so on and so forth. So we got to understand that this volatility is very hard, especially with regards to charts. Now, if you look at the charts, you can get some indications of accumulation, distribution, manipulation, and all that kind of stuff. But the reality is it's very difficult, especially if you're waiting for one individual to push the send button. So understand that. At the current moment, we have Bitcoin dipping and many projects dipping today. It's not a good look, I'll be honest. The overall market's looking a little bit sad. We're down approximately 5%, maybe a little bit more depending on the project you're looking at, but on average about 5-7. You can see that throughout the space. We're not making a lower low at the current moment, which is good. At minimum, some projects are coming down a little bit harder than others. Some of them are still in the uptrend, and you know, maybe that's pretty good on the lower time frames where we can start to see reversal for another pump, because we did come down pretty hard today. And structurally, we're still okay because we're still in that downtrend in the sense that the structure is still clear. You know, what I mean okay is that it's still very clear, and when things are clear, it's, you know, somewhat predictable. However, if you're going to start getting into lower time frames and start trading, understand that volatility could still be there. However, guys, we're still looking for a big bottom for this bigger picture trade, right? The one that takes us back to all-time highs, the one that potentially takes us to all-time highs and price discovery, and maybe an altcoin season. This is what a lot of us should be focusing on right now. And not to say that you should be taking so much risk, but you know what? DCing is a great strategy at this current moment, especially with all this uncertainty. DCing once a week, once a month, once a day, whatever it is that you put yourself on, whatever schedule, based on your cash flow and whatever you're willing to invest. Obviously, do not invest capital that you're not willing to lose, and systematically get exposure to the market. And that way, you can have that exposure if we go up, and if we do come down, you are happy to continue DCAing and accumulating your bags over time. This is how you can build a big enough position for the macro or the bigger picture reversal that we are still waiting for, guys. All right, guys. So overall, you can see the market today punished us a little bit, and I know you're here to talk about charts. So let's begin looking at Bitcoin, and then we'll take a look at the AERODROME chart. As per usual, let's begin. Let's take a look at Bitcoin chart. Let's see what's going on here. As Bitcoin, you can see, guys, nothing has changed. You have to have this mentality. The mentality is that we're still in a downtrend. So if we are going to go long in any time frame, just understand that you're going against the trend and the overall sentiment at the current moment. So you got to be a ninja. You got to get in and you got to get out. You got to put yourself at break even as soon as possible. You got to make sure that you get defensive and offensive at the correct moments. And obviously, being swift is the only way you're going to do it. Let's take a look at this in a little bit more detail. So today was a tough one, guys. Today was a tough one because a market open was looking pretty good. We're getting a lot of volatility. There was a lot of news and a lot of this and that, you know. And if you start going on to the 4 hour, the daily's clear. We're still in a downtrend, guys. Still lower lows and lower highs. If you go on the 4 hour, we see a bit of a structure that we're kind of working on at the current moment. We could get this nice bottom and start reversing for another higher high. We can see that this is very possible. Very, very possible. Are we oversold? We got oversold already. We're in an uptrend on momentum. I would like to see the bearish condition, bearish volatility come down, and then see what kind of bullish response we get. If we do come down and do not make a lower low lower than these guys, we're good. If we do make a lower low, guys, you dodge the bullet. That's how it is. You dodge a bullet. And then when the bullet gets dodged, you know, we come down for that lower low and we wait again for another opportunity. At this rate, ultimately, we're looking at this trend line that needs to be broken eventually, right? If we're going to end up going upwards, we need that to be broken. And a confirmation low, a higher low is not bad, right into this level. And it could take some time to build. In the meantime, I want to see this bearish response finish. As you can see, we just began it here on the 4 hour. We could come down to oversold conditions. And then I want to see what kind of low we make. We make a higher low, guys, game on. Momentum is on an uptrend right now. Maybe we get a bit of a reversal here. We get overbought. And in the meantime, I would like to long every time we get into the upward direction. However, the 4 hour time frame is a difficult one at this current moment because it requires you to hold this position a little longer than maybe you're willing to. And it requires that you anticipate tons of volatility. Who knows what the orange man is going to say? This is one of the things that you have to understand is that volatility, holding multi-day holds, exposes yourself to anything that happens in the news. And this is something that is a bit risky lately. So for a lot of us, what we're doing is blindly DCAing. I say blindly because it doesn't matter about price. It matters about the conviction behind the project, what you like, what you think has future value. And you look at some of the details regarding fundamentals and all of that. And then you start to say, you know, these are my picks, and I'm blindlessly just DCAing periodically based on a schedule that you may have. Then from there, you say to yourself, well, I'm a trader. I want to trade. Trading the 4 hour is tough. Right now, it's very tough because you don't know what's going to happen, right, in intraday. So a lot of us get on lower time frames. And this is where the traps come in because a lot of people trade the 4 hour the same, or the 15-minute or the 3-minute the way they would trade the 4 hour. Guys, that's not good. If you're going to get on the lower time frames, you have to understand that your invalidations and your thesis has to be a lot tighter because the volatility is going to be a lot more aggressive. And because of that, you have to understand that risk management is absolutely key. And don't overdo the leverage. But at the end of the day, those are the only major options that you have at the current moment is to trade the lower time frames, number one, and number two, to DCA very, very slowly. Now, if you're building any margin positions, which I have started, and on Hyperliquid and Cardano, and I have been building a few margin positions. I'm holding those margin positions, and I'm slowly building them over time because I do feel that ultimately Bitcoin is eventually going to bottom out. Now, I'm not sure it's going to bottom right here. It does look very possible that it bottoms right into this level. As you can see, Bitcoin currently is testing these levels and trying to potentially reverse right here. We didn't get any major indications. I want to be clear about that. We're still in a downtrend. The 4 hours not giving you much. We may get something. The lower time frames are for having fun within the day trading, doing your thing. So the real opportunity hasn't really presented itself, which is the opportunity to deploy and see a pump. It's not there yet. we could get it, but it's not there yet. I want to see a proper change of character here, guys. I want to see a proper structure that suggests pivot, and then we're going to get more aggressive. At the current moment, guys, you have to define whether you're a trader or you're not. And if you're not, then you want to be an investor or even a long-term trader in the sense that you're deploying bags and want to take profits at the tops. What I would be doing right now is investing in your knowledge about the asset class that you're investing in, so that you're well versed about what projects are healthy and what projects you should be deploying your capital in. Okay, so this is very important. Bitcoin is still in a downtrend, guys. We could get that reversal, and I'm hoping that we do. But until all of this uncertainty, the fear, uncertainty, and the doubt with the global geopolitical environment kind of cools off, guys, we're taking a lot of risk holding bigger bags on larger time frames. Okay, so be careful there. Now, all of a sudden, we start to look at altcoins. What do we say, guys? There's a lot of good projects out there. Obviously, risk tolerance has to be measured. We have some good gainers today. We have a lot of losers today, unfortunately. And a lot of people have been asking me about AERODROME. And I believe it's because there's still a lot of people that are bullish on base. For me, base was up 50-50. I was not the craziest about base, but this is not about base. This is about how can we get exposure to the base chain as far as an investment, as an asset. How do you get exposure? Well, it's not an asset that you can really buy. There's no coin. So how do you get exposure? Well, you can get exposure to a project that is built on base that is going to handle a lot of its transactions. And of course, what we're talking about is DeFi. So you have AERODROME Finance that basically is going to be looking for, transactional volume on the base chain. So here we are. Price not looking good. I'll be honest, horizontal, broke below horizontal. This was a good area of interest to expect some sort of reaction. We did kind of hesitate here, but we came down to hunt liquidity. And that's what happens in markets like this. This is what happens when market makers see opportunity of liquidity being trapped here. It comes there to sweep it all up, and here we are. Now, all of a sudden, do we get a change of direction of this trend? Well, it's too early to tell, to be honest. We've gotten pumps like this before, as you can see. Now, the trend could be your friend and continue down all the way down to about 11 cents. Imagine that, guys. And that's very possible. This is a very, very liquid level where there's a lot of people that are holding still and some profit and very happy about it. But market makers have a tendency to want to, hunt liquidity in the sense that it causes a lot of pain. And this is a max pain scenario. As you can see, lots of volume, lots of market participation. So maybe we do come down there. And to be honest, that's something that I would consider, that it is going to come down there. So one of the things that I usually do is anticipate scenarios. There's many of them right here. The bullish case scenario, of course, we get a proper structure. Actually, before we talk about that, we get a nice V recovery, right? Something happens, V recovery, break back above, back test, and bounce right off of this horizontal. Beautiful. We're loving it. Let's do it. Right? That's obviously a bullish case scenario. Another bullish case scenario is we structure out here. Something happens, whatever. We get some sort of structure. Maybe we get some sort of, indication of a reversal, a pivot point, something like that. Inverse head and shoulders, Adam and Eve's, cup and handles, whatever it is. Whatever type of structure you like that suggests pivot. Then we get in, maybe a little bit earlier than expected because we're trading the structure here, and with the tight stop loss here, we could definitely mitigate all kinds of risk and potentially get back up and back test and spring. So that's also another opportunity, right? So you're taking a bit more risk, but at least your risk is mitigated through structure and stop loss that can be placed below it. Okay, what else can we talk about? Now, all of a sudden, we talk about the bearish potential. There's a bearish thesis. The bearish thesis is, we pump up to here, and then we get rejected. Unfortunately, we get rejected right here, and we come back down. Now, the question is it a dead cat bounce with a rejection? And obviously, we come down and make another lower low. Is that possible? For sure. Why not? Right? That's very possible. What's another bearish scenario? Well, another bearish scenario is that we continue falling and being done with it. No response whatsoever. We come down straight all the way down to these levels, and we tap into this zone. Guys, is that possible? For sure. So you can see that, trading in general is about possibility. And what are the higher chances? What are the chances of these scenarios playing out? And you have to allocate the correct amount of capital based on that possibility. If your convictions are high about a particular possibility, you may be willing to take, more risk than usual. And usually, not usually, but always, the risk is directly associated to the position size of the trade. And a tool that we use here in the crypto space is using leverage. And leverage, there's benefits. Obviously, it's a tool because it's used to multiply your initial capital to give you an opportunity to have a bigger position size and take advantage of opportunities that you see in the market without onboarding more capital. So is it a good thing? Sure, it's like a loan. It's like a loan. So what do we do here? At the end of the day, do we take risk here in a falling price action like that without any horizontal support below? Absolutely not. So what kind of risk tolerance do you have? So what kind of position size do you build based on that risk tolerance? It is obviously that appetite, that risk appetite needs to be clearly defined at this current level because there's tons of risk for continuation to the downside. So this is how I would do it. Obviously, none of this is financial advice, but I would say, look, let's prepare for worst case scenario. Worst case scenario, we come down here. What would you do about it? You're going to buy the dip? Are you going to buy accumulate here? Maybe. You might buy some blind. You might say, you know what, I'm going to buy some. It doesn't matter. Maybe you bought some here blindly as well. I'm buying some. How much is some? That answer is going to tell you how much exposure and how much risk you're taking at the particular moment. Buying blind is risky without a structure. Buying blind on a dip without structure means that you're trying to catch a falling knife. Despite what the everything says, with this horizontal looking so good, yes, we did hesitate, but if you bought in blind, it should be small until we get structure suggesting pivot. We didn't get it, guys. We came down and hunted more liquidity down at these levels. Now, do we have a structure here? No. So how are you going to get in with a big position? Do you want to buy some? Okay, buy some. But how much is some? Of course, some is all dependent on an individual. For me, maybe percentage-wise, it would be 10%. Maximum, more or less, 10%, right? That's what I would think. I would like to say. Like, I would like to think that my initial investments at these blind levels would be 10%. Now, after time, as the structure is built, I would gladly deploy a little bit more into the structure, even if I don't get the best price as I would have, maybe even down here. It doesn't matter, because what I'm doing is I'm increasing my position size, therefore increasing my risk by and validating that decision by assuming that this structure is either going to play out according to my thesis, or at worst case scenario, I have a clear invalidation of that thesis where I can stop myself out. That's very important, because not all trades are profitable, but at least you can invalidate yourself based on that thesis. And if I can get an entry very close to that invalidation, my losses will be small. And then guess what, guys? As soon as I see a recovery or a pump, you put yourself at break even. At minimum, put yourself at break even. And no matter what happens, if we do get rejected, so what? Guess what? All you did was lose a trade, not losses as far as capital goes. You lost the trade, fine, it was a loss in the sense that you didn't hit a bullish target or hit your TP or whatever the case is, but you didn't lose any money. You didn't lose any capital. And your primary objective, your primary role as a trader, first is to protect your initial investment. You're the custodian of your capital. If you lose your capital, you cannot play again. You have to understand that your capital allows you to keep on trading. So you've got to protect that at all costs. And putting yourself at break even is a great strategy, particularly if you're learning, particularly if you're trying to, get into high leverage on lower time frames, on the 1 minute, 3 minute, 5 minute, 15 minute. Be very clear at your invalidation. Now, once you're in profit, you can start asking yourself, well, how do I protect those profits? How do I protect the gains? Do I want to classify myself as a profitable trader? Even if the profit is only 5, 10, 15, 50%, don't be greedy. Take a bit of profit. It's not a big deal. And then stop yourself out if it happens to reverse at break even. But at least you walk away saying, I am profitable. Much more than many other people can say, because a lot of traders are not profitable. So there's a couple objectives here that I would, obviously this is a little bit of a learning lesson as well, followed by the AERODROME chart, but you can see the chart doesn't give you much opportunity, number one, to deploy capital where your risk to reward ratio is healthy, but number two, get into a level where you can invalidate your thesis very clearly. That's a problem, guys. So I would say the best levels to look for are ones of which you can find that clarity, and there is none at the current moment. So be patient here. A rejection here will give you an opportunity for a short. A break above will give you an opportunity for a bounce or a long. A structure will give you an opportunity for a long. A dip further will give you an opportunity for a long. You get what I mean? So right now, guys, honestly, with AERODROME, it's about DCAing. It's about buying a little bit spot, and don't take risk. Buy enough on spot that you're happy to continue deploying weekly into this project, because your fundamental thesis is that AERODROME is going to do well because base chain is going to have utility. It's going to have lots of transactions. There's going to be a good ecosystem where people are going to want to get involved, and because of that transactional volume, we are going to see AERODROME do very, very well. Guys, that has to be part of your thesis, and eventually we will and we should see a nice recovery in AERODROME and many other projects for that matter. All right, guys, so I hopefully was able to give you some value here. You can see that AERODROME is super oversold, so DCAing right now is not a bad scenario, and you can see because we're oversold, eventually we should go overbought. Eventually, keyword eventually, when we don't know, but eventually, and then we can see that the trend oscillator is getting multiple drives of Class A bullish divergence to the upside as we are falling, suggesting that eventually the bears are going to get some weakness and bulls will get some follow through to the upside. But when? That is the question. And in the meantime, take it easy, guys. DCA nice and slow, anticipate the worst, prepare, and all of that, and hope for the best. And ultimately, eventually, over time, things work out. All right, guys, if I've offered you any value here in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.